Back with first trades right here on ET Now, and after a soft start, we're beginning to pick up. You've got L&T, you've got Reliance Industries, Bajaj Finance, TCS, and even ITC, which are beginning to now inch higher as we speak. Maruti goes steady into its earnings today, 0.5% higher. And let's revisit where Eternal as well is. That stock also, or rather that company also due to declare its numbers. M&M, Tata Steel, Coal India, your maximum contributors or highest contributors to the Nifty recovery so far as we speak. But the one sector that you can't take your eyes off has really been power. So let's try and understand what really has been happening. I mean, look at the kind of 1 month performance that you've seen from the likes of a Quality Power, which has shot up about 61%, Torrent Power, which is up 33%, Adani Power, which is scaled up higher by about almost 42%. And, there is that entire cheer around the Renewable story panning out. So let me welcome on board Apurva Bahadur from IIFL Capital to talk about exactly this. Apurva, hi, morning. Great to have you on ET Now. Apurva, tell me, what is the required capacity for battery storage and pumped hydro to try and make renewable energy reliable during this very peak summer demand that one is seeing?
It's an interesting problem that we are facing right now. The power demand definitely has increased quite significantly. And this comes after a lull of almost 2 odd years. So last such power demand surge was in around FY24, and then 25-26 were subdued. Given that in 26 especially there was unseasonal rainfall. So going into this year, the construct is such that while the demand growth was expected to be higher, and with all the weather-related implications of El Nino as well, we are already seeing the temperatures being significantly up year on year because of the West Asia crisis. Right, gas power plants will struggle this year to maintain availability unless the situation resolves and the players can arrange for alternate gases. At the same time, the capacity which we have added in the last couple of years has primarily been solar. So we currently sit on 150 gigawatts of installed capacity, which is great for meeting the daytime demand. As you see that on 24th of this month, when the demand hit, all-time high of 256 gigawatt, there was no power shortage. The challenge lies in the evening bit, wherein the solar sort of does not generate anything. So the contribution of solar goes down to zero. Gas is challenging. And because this year the expectation is that of lower and weaker monsoons, most likely hydro and wind generation will also not be that high as they were last year. So again, this puts pressure back on coal. So the coal power plants will have to operate at a much higher PLF and availability. And we will also have to add a lot of batteries and pump storage to meet the gap. Now we have made some progress on battery capacity addition in the last 6 odd months. Two large players who have done exceedingly well are Adani Green and Acme. Both of them sort of installed meaningful battery capacity. On the pump storage side, NTPC recently commissioned one of the pump storage plants. While on the unlisted side, there is Greenco as well, which have an operational capacity. The challenge is that to scale this up meaningfully in a very short duration will be extremely difficult. So quite likely that this year, if the summer demand sort of continues to outperform, we might see peak shortages like we saw 2 years back, or maybe more than that as well. From a planning perspective, the government has been quite clear. So we saw the coal capex cycle revive almost 2.5 years back on the back of this thesis that India's peak power demand will continue growing because of the rising appliance penetration, be it air conditioners, now this year induction cooktops as well, and in future EV chargers as well will have a very significant sort of demand load. But the coal plants which we have ordered, so almost the plan is to build 90 gigawatts, 95 gigawatts plus of coal capacity by 2035-36. They take time to build out, right? So there will be a period in between wherein storage capacity will have to be added, and government has made plans to add battery capacity as well as pump storage. Again, pump storage takes some time to build, so battery was something that which we could have quickly deployed. We are on track, although because there has been an increase in prices of batteries in China, So there might be some mismatch. Hopefully next year onwards, we will have much more battery capacity than what we see today.
Right. Yeah, plenty to unpack there, Apurva. Thank you so much. But I want to try and understand where within this value chain is risk reward the most favorable at this point.
So right now we see the risk reward most favorable at the bottleneck, and which is storage. Indian grid currently is playing out a classic sort of time of day arbitrage. Daytime there is adequate solar. In fact, in some time slots it's surplus, which means that the pricing in daytime, especially in the merchant market, drops to very low levels. Even some days it goes below 1 rupee. Some of the solar capacity is also asked to back down to maintain the grid frequency, which can help to charge this merchant storage, and then subsequently that time shift of electron from daytime to evening adds a lot of value. So any player who has merchant storage capacity, specifically batteries or pump storage, should sort of corner a large portion of the profit pool, followed by those who have merchant coal capacities, and then subsequently anyone who with merchant gas as well. Although the price, because of the price rise in gas, the spread will be significantly compressed versus a battery.
Okay, quite interesting. The other thing that I also wanted to ask about, Apurva, was about prices and whether one can expect power prices to remain stable with the massive investments which are required in the infrastructure and the growing needs of the country.
Yes, I think we will see. So generally, there will be an inflationary trend in electricity prices. So quickly, I'll just explain. Electricity price is the function of three or four things: the cost of generation, cost of transmission, and cost of distribution. All three require infra build out because India is growing and transitioning at the same time. Right, so we have to invest a lot in renewables. At the same time, we have to invest a lot in coal as well. Grid build out in the last 2 years, we have seen the amount of capex which government has earmarked, almost 9 trillion rupees till 2032, and then and subsequently more thereafter. On the distribution side as well, there have been government schemes like RDSS, which require a lot of build out in terms of network capacity addition as well. So all of this ultimately gets charged to the customer, which leads to an increase in the tariff. This will continue for some time. I think once we cross a certain threshold in terms of the renewable plus storage capacity addition, the view will change and it becomes deflationary because there is no variable cost component once we cross a certain threshold on renewable build out.
Apurva, most of the recent renewable energy contracts have BESS built into it, and the pricing is a combination of both of them. But one of the key concerns which is coming out is the kind of aggressive bidding which is coming for BESS, which may not be commensurate to the returns that should be coming in from the combined entity. What is your take with respect to what should be the return that should come in when you club both the renewable and BESS together, and how do you see this scenario panning out?
Right. Even for this auctioning, we have seen this sort of historically run in cycles. We have seen a similar story play out in solar as well when we started this journey in 2014-15 onwards. What ends up happening is that because deploying battery is not as complicated as building a new coal plant, so a lot of new entrants without sort of a lot of a deep understanding of the sector and the nuances enter and then probably bid aggressively with a view to build out a portfolio on the back of cheaper cost of capital. What we need to understand, and probably market will also figure it out over time, is that batteries are commodities, right? So pricing is largely decided by China, which has the entire upstream industry. We had written about this in December last year that the input prices of lithium battery started increasing in China because of the anti-involution push of the government, and subsequently they also reduced certain rebates, which is why a lot of BESS projects which were awarded earlier in the last year and a half, and which were bid on extremely aggressive margins, will face execution pressures. right? So I think it over time probably market will start sort of will arrive at an equilibrium in terms of the risk reward. For solar projects, we have seen anywhere between 11-12% equity IRR to as high as 16-17%, depending on the competitive intensity at the time of bidding.
Interesting. Apurva, great to be chatting with you. Thank you so much for joining in with that perspective on what's really happening within the energy sector.
Thank you. Pleasure.
Okay, let's talk.